In this indicator, the signals are generated by the help of volume-weighted money flow calculation, nonlinear flow strength correction, and volatility adaptive band construction. This is a next-generation indicator that you should add to your trading system now. To have this indicator on TradingView platform, here you just need to click on Indicators and search Smart Money Flow Cloud, this one, which is written by BOS Waves. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. Before I start explaining the indicator and how you can use it in trading, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, let's see what we have here. Unlike other indicators that mainly rely on simple crossovers of lines or moving averages or create channels based on fixed multipliers for the bands, this indicator is built based on a volume flow detection system that, besides using price action for identifying direction and generating signals, it also uses money flow analysis, and it makes an adaptive volatility bands based on institutional levels of pressure and activity. So this indicator, instead of relying only on the price, it also uses a volume weighted money flow system to confirm the direction of the price based on the actual buying and selling volume in the market. Alright, let's see how we interpret this indicator. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, as you can see, we have a bands above and below this middle line, which is called baseline. Actually, we have two lines here. One is smoothed based on open and the other is smoothed based on closing price. When it is blue, the price is advancing in an uptrend, and when it is red, the price is declining in a downtrend. I will explain when and how this color changing is happening, and I will teach you a trading strategy based on this, so make sure you watch this video until the end. Alright, as I said, we have two lines, which one of them is based on open and the other is based on closing price. The gap between the two lines shows intra-bar directional bias. So when there is a gap, the momentum is strong, and when there is no gap and the lines are close to each other, that shows that the momentum of that direction is weak, which can be just because of a pullback, like here in this example, or in a more serious situation, there can be a reversal and changing of the color. And then we have two bands above and below the baseline, which are not fixed and they are dynamic, and they have the ability to adapt to the current volatility of the market. In times that we have higher levels of activity, the bands are expanded, and in times that we have lower levels of activity, the bands are contracted. As I explained earlier, in this indicator, we have a volume weighted money flow detection system. So this baseline is not calculated only based on the price, or these bands above and below the baseline are also not only calculated based on volatility, and volume flow strength or weakness are also considered in the calculation, so providing more accurate information. Basically, when the indicator is red, the price is declining in a downtrend, and when the indicator is blue, the price is advancing in an uptrend. And when the color changing happens, the indicator shows buy-sell signals. The color changing happens when the price closes above the upper band or close below the lower band. For example, here you can see that the indicator was red, and then the price closed above the upper band and the indicator turned to blue and showing buy signal. Or following this uptrend, here at this point you can see that the price closed below the lower band, so the indicator turned to red and a sell signal is shown here. Now you may ask if you can trade only based on these buy sell signals. No, because you can also have false signals like this buy signal here. So you need more confirmation before entering a trade based on these buy sell signals, which I will explain later and teach you a trading strategy based on these signals. So make sure you watch this video until the end. This indicator also shows retest signal. Whenever the price reaches the baseline, a signal is shown by the indicator and they can provide an opportunity to enter a trade in the pullbacks inside a trend. This indicator can be effectively used in two types of trading strategies, trend following strategy and reversal trading strategy. I will explain both of them and teach you how you can use these signals for entering a trade. In a trend following strategy, we use this indicator for trend identification, which means that we identify the current trend and then by the help of another indicator or price action concepts, we try to find trading opportunities in the pullbacks inside the trend. As I said, the indicator itself also shows retest signals, and you can use these signals for entering a trade. For example, from here, you can see that the indicator is red, so we are in a downtrend and we should look for short position opportunities. A good opportunity is when we have a pullback and the indicator shows these types of signals when the price reaches the baseline. So this was a potential trade entry, and this one and also this one. And here in this part of the chart, you can see that from here, the indicator became blue. So we can say that the market is in an uptrend and we should look for long position opportunities. And as I said, the best opportunities are when there is a pullback in the market. So these retest signals could help us to enter a trade. But we don't trade only based on these retest signals, because we can encounter many false signals when a reversal is happening in the market. Like these two buy signals that we have here, you can see that they were false signals. Or for example here, when the downtrend was ending, this sell signal here is also a false signal. So we need more confirmation to decrease the number of false signals, and we can use a price action concept for this purpose. Let me explain so you completely understand. When we have a pullback and retests of the baseline, like what happened here, we can enter at early stages, for example here, but as I explained, this increases the risk. So it's better to decrease our risk and wait for more confirmation before entering a trade. When the price goes for a pullback, before that, a sewing low is created, and this can act as a potential support level. The price may get difficulty to break this level, especially when the downside momentum is weak. But if the downside momentum is greater than the upside momentum, the price can successfully break this level, exactly like what happened here. So we wait for the price to close below this level, and then we enter a trade. Although this is a later entry in compared to, for example, entering here, but this is a safer entry point, and we have higher probability to have a profitable position, because this method helps us to avoid false signals that happen in situation like this when a reversal is happening. Here you can see that we got a sell signal, which is when the price touches the baseline, and before that a sewing low is created, but you can see that the price never came down and broke this level. So in practice, we could easily avoid this false signal that we had here. Similarly, during an uptrend, when we have a pullback or retest signal, when the price goes for a pullback, before that a sewing high is created, and this can act as a potential resistance level. If there is higher upside momentum in the market, the price should successfully break this level, and you can see how after that the price turned to an uptrend. Also for this retest signal or this one here, you can see that this candle closed above the previous sewing high, so providing another trading opportunity at this point. By the help of this method, we could easily avoid these false signals that we had here, because you can clearly see that the price couldn't break above the previous sewing high, and instead we got a reversal of the price to a downtrend. This indicator shows the retest signals by the help of these stars that are printed on the chart, but you can also act based on other pullbacks where the price goes near to the line, not necessarily touching it. For example, this one is also a pullback, or in this part of the chart, this one is also considered a pullback, and they could provide a trading opportunity to enter a trade, because after them we had price action confirmation. Please pay attention that this method will help you to avoid many of the false signals, but not completely. No indicator, trading strategy, or trading method is capable of this, and losing positions are always part of the game. You need to manage the risk so you can minimize the effect of the losing positions. 1% role risk management is the best risk management strategy that you can use. I have a guide on this. The link is also placed in the description, and make sure you watch it later. Alright, now let me teach you how you trade based on these buy-sell signals that show starting of a trend. As I said, we have these buy-sell signals when a reversal is happening in the market. So they are actually showing starting of a new trend, but we cannot trade only based on these signals because we can encounter many false signals. So we need more confirmation before entering a trade. And I want to teach you a price action trading method for this purpose. First, I explain a short position setup, and then I will teach you a long position setup. When the indicator turns to red and we get a sell signal, we don't enter a trade here and we wait for a pullback. If the reversal is not real and we still have greater upside momentum, the price will turn back to advancing. But if the reversal is real and now we have greater downside momentum in the market, this advancing of the price will stop here, and then we will have decline of the price. As I explained for the trend following strategy, when the price goes for a pullback, before that a sewing low is created, and this can act as a potential support level. We wait to see if the price can break this level or not. When the price is closed below this sewing low, now we have higher probability that a downtrend is forming on the chart, so we can enter a trade. Following this downtrend, you can see that here the indicator turned to blue and we got a buy signal, but we don't enter here and we wait for a pullback. You can see that the price declined near to the line, and when the price goes for a pullback like this, before that a sewing high is created, and this can act as a potential resistance level in the market. We mark this level and we wait for breaking of this level. When a candle is closed above this level, we can say with higher probability that a reversal happened in the market and the price is gonna make higher highs in the market. To show more examples, here you can see that we got a sell signal, we wait for a pullback, and then we enter a trade. When this created sewing low is broken, you can see that this candle is closed below this level, and you can see how the price declined after that down to this point. Here you can see that we got a buy signal, then the price went for a pullback, but before breaking of the previous sewing high here, we got a sell signal here. So we should wait for a pullback and then breaking of this sewing low here, which it didn't happen as you can see. So we could avoid this false sell signal that we had here. Here you can see that we got a buy signal and then we got a pullback, and after that you can see that the price closed above the previous sewing high, and you can see how the price turned to an uptrend after that. By the help of this method, you can easily avoid majority of the false signals that happen. For example, for this sell signal here, the price advanced after that, but not a pullback, and the price never came down and breaking this sewing low that is created here. Or similarly for this sell signal here, which is also a false signal, you can see that we didn't get any price action confirmation. By the help of this method, you can filter many of the false signals, but not all of them. This is not possible in reality. You can never have a trading strategy with 100% win rate, and you need to manage your risk properly. 1% role risk management is the best risk management strategy and recommended by professional traders. I have a complete guide on this. The link is also placed in the description, and make sure you watch it now, because without a proper risk management strategy, definitely you will be out of the game. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.